Okay, the next fish in the sea that we're going to look at is something near and dear to my heart, which is angel investing. I'm an angel investor and have been for 25 years. It's fun. I enjoy it immensely, and I know lots of other people who do it that also enjoy it. People do it for different reasons. If you're an angel investor as opposed to, say, a friend and family member, you're really doing it because you do expect to get some kind of a return. And if it's a financial return, that's what you're focused on. In some cases, there's social impact that people are focused on, and it could even be a combination of the two. But what you need to think about is, angel investors invest for their own reasons. And it's hard to say exactly why people do it. I can tell you that in my experience, they tend to do it because they've been entrepreneurial personally, they've had success, they have in their lifetime been mentored by other people in a positive way, they want to give back, they want to mentor others, they like being part of the startup process, it's fun. And they want to mentor people who are junior to them. So that's what they're looking for. As to which angel investor may be the right fit. I've been involved with angel groups all over the world, and I would say most angels tend to like to invest in industries that they understand, not surprisingly. So, if you come out of the medical technology industry, you probably are comfortable in that space, and if you come out of the ad tech space, you're probably comfortable in that space. What you don't tend to see very often, in my experience, is people who invest outside of either their passion or their competence. Now, in terms of how you do it, you can approach angel investors through some of the online platforms. You can approach them through the angel groups or the angel networks. And frankly, you can usually find these people through LinkedIn if they hold themselves out as an angel. And in terms of how you need to deal with an angel, I would say angels are a lot more sophisticated than friends and family. And so they would tend to expect the kinds of instruments that maybe a seed capital firm would expect, although they may not demand it. So, personally, I tend to see convertible notes used quite a bit. Sometimes it's a series seed. In my experience, I almost never invest in common stock. I've heard of angels who do common stock deals, but it's not that often. Someone asked me the question recently why I personally, as a professional angel investor, don't typically invest in common stock. And I think the best way to illustrate why I don't like to do it, at least for cash investments, assume that, great, ambitious entrepreneur, going to go to the moon, pre-revenue, product, may be looking pretty good, possibly, working prototype, that kind of thing. He says, I think it's a $10 million company. That's the value of my company. And for $100,000 from you, I'm willing to give you 1% of the company. So really the pre-money value on that would be $9,900,000. So you add the $100,000, post-money, it's a $10 million deal. Okay, if I buy common stock, where I have all the same rights and preferences as the founder, basically I have 1%, he or she has 99%. Now let's fast forward and assume things actually didn't go that well, but they weren't a complete disaster. Let's say that after spending all the money, and let's assume that there was no additional financing, the company sells for $5 million. Okay, if I have common stock, the way it would work after payment of all the creditors, let's assume we're splitting $5 million, the founder would get $4,950,000, and I would get $50,000. Thereby I suffer a $50,000 loss, and the founder just became a millionaire. In fact, $5 million. So for the founder, actually, that's not a bad outcome. But for me, it's not a total loss, but it's definitely not a good investment. And so that's why I don't like common stock. I prefer to structure it in the form of, say, a series seed or a preferred stock. Because the way it would work in that scenario, let's just assume it's a straight preferred stock. If the company was sold for $5 million, I would get my $100,000 back. So, okay, I didn't make any money. And if it was a participating preferred, then I would get my money back plus participate, so I'd get 1% of the remaining proceeds, or about $50,000. So in that case, I actually got a slight return, maybe close to $50,000 return. Meanwhile, the founder actually did pretty well, because honestly, a $4.78 million exit is pretty good. So that's the economics, and that's why it makes sense, frankly, for cash investors to get these, convertible notes or Series Seed or preferred stock. And that's the way I prefer to work. What kind of deals do I like, and what kind of deals do people that I tend to co-invest with like? I like innovation. So if it's an innovative idea, if they're ambitious, and if they want to go global, those are the kinds of things I'm most interested in. As to the industries, I would say technology is the one that I've done, and that includes, over the last 20 years, a lot of internet, consumer internet, online analytics, benchmarking analytics. In the last year or so, I've done 3D printing. I've done a couple healthcare deals where they're trying to break the business model of the traditional healthcare industry, that kind of stuff. Now, it really depends on the region. Currently, I live in Basel, Switzerland, and Basel, Switzerland is almost like the Silicon Valley of big pharma and med tech. So within my local community, there's a ton of really high quality med tech deals. I don't do biotech because it takes too much money, and it takes too long. So you need big, deep pockets for that sort of thing. In Switzerland, there's a lot of blockchain. That's true in London. If you go to the Valley, of course, there's a lot of internet and cybersecurity. I could go. I mean, it really depends. The quality of the deals that people invest in tend to be reflective of whatever the local market. I mean, that's the reality. So if you're successful as an entrepreneur and you have money to invest as an angel, it's probably because you've been successful within the local market, and it's probable that there are other businesses in that local market that would be suitable. That's been my experience. So the question that I've been asked is, what form of investment, what's the security that professional angels typically invest in? And for me personally, I can say, unless I'm providing services in the form of an advisory board thing, where I might get, say, restricted stock in exchange for some services, I would pretty much never invest in a common stock deal. And the reason is, maybe I know too much. And so for a fast growth tech startup, a convertible note or a Series Seed, something that's going to be the kind of currency that when they need future financing, because in most of the deals I invest in, they do need future financing, that I would be in the cap table along sort of the same type of security as the other cash investors who are going to provide the later stage capital. So that's what I think you would typically see with a professional angel. You might not see that obviously with the friends and family, but that's my personal preference.